The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, October 17th. My pleasure to be here. Let's see, I'm here every single market day, Monday through Friday, 11 o'clock till noon. 877-927-6648 is the number to call. And I'd love to take your calls. Great day for taking calls. Couple of things I just wanted to go through. Number one is in this particular environment, I think it's really important to try your very best to ignore the news. Thank goodness I've stepped aside, just absolutely doing my very best to focus totally on stocks that I thought would possibly going to do well. The ones that I thought would fail, if they didn't fail, well, so be it. But you've got to just be very independent thinking here. Why? A very simple reason. If you're listening to the fuss and to the noise, it detracts and it takes away from the recognizing of chart formations that is so important to our work, at least as far as I'm concerned. It's also very important to be able to look at certain key ingredients, and I'll just jump to one right now in the charts. If you're looking at Tiger TV, as always, if you're looking at this particular chart right now, this will be I usually have three charts that you can see. The one on the left is the daily, the one in the middle is the weekly, and the one on the right is the monthly of the same issue that we're looking at. In this particular instance, what I'm doing is I'm showing the daily of the E-minis, which is still from the low of that was the low of Wednesday a week ago. There has been a straight up move. I call this a floating letter. I'm going to go through that in a moment. Look, that's an A. That's an A. That's leg A, leg A, leg A, leg A. And it looked like there'd be a peak A today, but oh, no. Even with IBM, UNH, and the third one was, I can't remember right now. There was a third one from the Dow that was looking terrible. The Dow's only down 66, and the S&P is up 1.27. This leg A up here is very important because it essentially says to me, with a stochastic at 89% of the MACD still expanding, that even though it never broke the previous low of 1618 down at, I should have typed that in, September the 26th, August the 28th. August the 28th. This can still activate if it goes above 1726.75, a leg E at this particular point. That's if there's no new peak between now and it breaks 1726.75, if it does that. Why? Because it's a V-shape or a cup-shaped formation, and if it had broken down, and this was a brand new leg A up, that would be extraordinary. I'd have to call it leg A. In this case, the moment it breaks above 1726.75, if it does that, which looks like it's going to do, I have to move the A to the right, and I have to call it E/A, or if it's B, E/B. That's the way the Chapman wave works. That's the only time that there's a question. But in the meantime, it's not an issue as long as the markets are moving up. And when I'm looking at this, I'm looking at it and saying, what would happen? What would be the signal to tell me that there should be a failure at any moment? And that signal is, I'm just going to grab this is the 120-minute chart. It's going right into, and I don't think you can give it up now, having ignored IBM. This looks very positive. It's going right into the big resistance between right here at 1717 and 1721.88. That's still underneath the 1726.75 high of the 19th of September. So, but there's an apex coming here. You break above the resistance line in a rising wedge the wedge formation. That is a narrowing going to the apex, and that is a big positive. So I'm going to be watching this real closely, but right now it seems to me to be acting very well. Now let me take this away for a moment and show you something else. This is what I show my subscribers every day. What I said is that today we should see a downward move with a possible test of the 15,218 200-period exponential moving average in the 120-minute chart of the Dow. Why? Because the Dow made a high of 15,374 at peak E in a particular pattern that I watch real closely. And it says that if it was to fail, that there's a real good chance that it would retest what was resistance, became support, and now we're going to see if it's resistance and what I call a springboard. Is that 200-period moving average going to be? Well, today the low is 15,220-something. 29. How about that? 11 points off. And now it's making the Roman candle, and that's going to be a big positive if it breaks up, and if it comes back into halfway into the middle of that wick, it comes back and retests. Real simple. But wait a minute, that's not the issue. Come on. 13.26 is the issue. And look what happened. The VIX has gone below all the support levels in the 15s, plunged to 12.89 this morning. It's at 13.26. As long as that selling pressure, I just treat it real simply. Selling pressure, buying pressure. Selling pressure, buying pressure. I don't want the fear and greed. Those are determinants that I cannot agree with. They occasionally are in agreement, but mostly I would have to say, think of it as buying pressure and selling pressure. That's the best. Now look at this. Now, question of the day. Basil, the trend started out this AM at 0.59 and is now at 1.18. Yeah, the trend is moving higher, but it hasn't given me any signals yet, and it's got a fantastic record of giving signals. It's up in the 96 or 98% level at this particular point, and it hasn't given me a signal yet, so I'm just ignoring it. And here's the daily Dow and the weekly with nothing else but the bar, no candlesticks. And there's the two patterns that we're looking at. Either there's going to be the H pattern that fails, and it has to fail really soon, or else it's going to break out from the rising. Once again, we've got a rising. This is an inverted falling axe in a sense, but most importantly, what we're looking at is that if there's a break above 15,374, I'd have to say 15,390 is really the level. That's going to be really positive. If there's a breakdown later in the day, Dow goes back to 250s or something like that. It says, okay, the digestive phase, that's fine. But that VIX is saying buying pressure, and this is still leg A up in the S&P daily, the cash. So these are the things that we look at. My subscribers get this every day. We look at the 120-minute chart. See, there's peak E with the left side, right side price time match. I said I'd talk about one thing, but let me just go to the numbers. Got callers online. The numbers are the Dow's up. The Dow's down 66 at 15,307. Comp index is up 438.43. The S&P, the S&P right now is up 1.55 at 1723. You've got gold up 37. That's going to be very interesting. 13.19. I have to give bravos, first of all, bravos and kudos to Larry Pesavento. Last week, he on Wednesday, he talked about it being really positive. First time I heard Larry talking like that for quite a while. Very positive, he said. And he's absolutely been perfect. Yesterday, I heard Tom talking about gold. He liked the way gold was acting. Today, it's up $36, $37, and don't forget, this is a perfect time. If you got the Gold Report 600 edition coming up, specials going on. Wow, if you got that, you've already paid for your year subscription. Congratulations, Tom. And now let's go to the further on we'll go. Yeah, gold is up 36. The silver's up 44 cents. Platinum's up 29 to 14.28. That's good. Copper is just stuck in this trading range now. It's down 2.40 to 3.28. Crude oil is stuck. It's at 100.70. But bonds are up 1 point. That's really interesting. Markets up. Bonds are up. Bonds are up a point at 133.30. And the dollar is down huge. It's down 0.79. It's helping gold. We're going to go to our first caller. We've got Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good morning, Basil. How are you doing today?
I'm very well. How are you doing as far as the fall is concerned? It must be real pretty out there.
Yes, it's gorgeous.
Good.
Beautiful. Got deers running around, all kinds of good stuff.
Ah, that's nice. That's fun. So you wanted to look at CMG.
CMG, yeah.
Okay.
CMG,
Okay.
look at that first, yeah.
Okay, CMG, I believe, comes out with earnings after the bell today. Now,
Right.
what I did for my subscribers, I did a whole thing, and then I just scrapped it right at the end. I wanted to go short CMG because of a couple of things, and I'll talk about why. At the very same time, I said to myself, we've had a fantastic gain, about a 100-point gain on CMG on the short side at one point about a year or so ago. And since then, I've been nibbling away at 1%, 2% shorting. They've added up, but it's still not a big deal. But it's irritating. I don't like that because I thought we were getting it, and it's just a monster on the upside. If I hadn't taken those positions, I absolutely would have said I would short a small position of CMG on a bounce this morning. So it would have been between the close of maybe the 434s, 435 area, and what did it close at yesterday? I think it was 430. Yeah, 434, and I would have said maybe 436, and I would have had a stop, a buy stop on it of about 10%, but it would be a small position short with a 10% risk only because there's a peak D in the daily with an inverted doji candle at 447.65 as the MACD, and this is the reason why I didn't continue with that thought, with the MACD reversing, but the stochastic turning down sharply, as well as the on-balance volume, as well as the relative strength. The more I looked at it, I said, well, that 9-period moving average in the daily at 435.79 has been fantastic support. The fast-moving average of the MACD, unlike what it was, I wonder if I can go back to that day. Huge gap down, huge gap down somewhere. I can't find the day. No, I can't find it right now. So
It was like 10 days ago, I think.
No, I'm talking about the one that we had way back, and that was just a monster. Yeah, there might have been back on about October, a year ago exactly. And we were in the position, and we got this huge gap down. But the MACD and everything was stalling already. So I'm looking at this, and I'm saying, I'm looking at something very different here. I'm looking at the potential that if there's even a little bit of good news, it could pop up, and I'll explain why. So I'll go through the parameters because I'd like to. This is a trade that I actually said I'm putting on, and then I said, no, I'm canceling. There is no trade. Here's my thinking, but there's no trade. I'll be right back with Mike straight off this. The Dow's down 62, S&P's up almost 2. I'll be right back after these messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement the program. The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians. Dow's down 68 because of IBM, and you've got... That's really a big weighting, and the Dow, I think it's like 60 or 80 points just alone with IBM. So, and the S&P's up just a tad. And we're on with Mike in Pennington, New Jersey, and we're looking at CMG. I just wanted to quickly go through this. The reason why I felt that I didn't have the weight of evidence, certainly anything can happen. My suspicion is that CMG is real close to a pretty decent consolidation. I just want the evidence, and the reason why I said there's a chance that if we bought, say, only 5 shares of a stock trading at 446 at the time, or 440, that we could be, you could treat it as if it was an option. I looked at the puts, and the puts are very expensive, and then they're going to run out. The one runs out in 3 days, and if it's November, I wanted something that would be of duration. Now, if I'm looking at that, then I'm saying to myself, I'd rather have evidence that there's a 10 or 15 point drop in CMG, and then I've got the evidence to say, okay, now every rally could be shorted if I'm looking at the weekly and there's a doji candle here. If, in fact, at some point in the next week or two, CMG breaks at 424 support in the weekly chart, that'll turn down the MACD, and the stochastics at 94%. So the weight of evidence says, wow, you're taking a gamble here, because any good news could break it above the 447.65 high, and then you're kind of stuck. You have to now trade a position, try to get out of it. I don't need it. I'd rather not take a loss. Yeah, then sacrifice, no. I'd rather not get the gain than have a loss. That's as simple as that. So I'm trying to be as careful as I can. So that's my thinking of CMG. I think it'll be ready one of these days. But it's making a V-shaped pattern in the monthly. It's got a doji candle so far, and the week is not finished in the weekly. I'm going to be watching this real closely. Now let's go to the HPY. Tell me about HPY, which is Heartland Payment Systems Inc., trading at 41.97, down 31 cents. Do you have the stock, or what's the story?
Yeah. I've had it since $25.
Okay, so I'm the wrong guy to call. In fact, anybody is the wrong guy to call, because it's trading at $42. You've been the one that traded this, got into it, got a fantastic position. All I can say is they are in an area that is perfect for this environment. That's what the stock chart is saying. It's walked the 9-period moving average, even though it's in leg D, second buy mode in the monthly chart since the low of 2009, I think it was. Yep, 2009. It's all-time highs. It came public in 2005. It is way surpassing the 2023-ish area of its IPO when it came out. It's almost double. I love the look of it. The interesting thing is there's a leg F/B in the weekly chart, and that in fact has a cup formation, beautiful cup formation, broke out decisively. MACD's at 76%, the MACD is good. Stochastics at 76%, but climbing. And it's really the daily that is in leg C, possibly peak C today. I think you've got a fabulous stock. It's a pity you called me, because I'm liable to say to you, I'd be looking, if it got to the 40, if it broke to 1 penny above the most recent high of yesterday of 42.49, I'd have a stop and a little bit of a position, and that stop would be, somewhere around 41.50, make it fairly tight, 41.20. If it breaks above, and have it as a trading stop of about a point or so, which you will be taken out. But the reason being, it is a little bit extended, and that would be part of money management to reward yourself on the way up. But actually, you're in it, and I don't really want to mess around, because the stochastics at 90% in the daily. The MACD is expanding. The weekly is starting to improve after that minor decline from 40 to 37. I think it's the right stock in the right area, making new all-time highs in a market like this. I don't want to mess. I want to call you up and say, hey, Mike, give me another one of those.
Yeah.
No, I didn't want to tell you. Did you have a particular plan with a particular goal, or are you just trying to ride it as long as it starts to act, it keeps acting well, or what?
Well, I had a friend that was working there, and I started researching everything, and I saw that the area was growing with all these, being able to pay with a smartphone, and everybody's getting involved in that, and then they were, and right. Everybody, no one's using cash anymore, and the company.
I love it.
Everything the company does is great compared to their competitors. So.
Actually, you know what I'm going to do? We've got a break coming up. I want to just think this through during the break, and I'm going to come up with something, because I'm putting it on my watch list as well. So hold on, Mike. If you don't mind, you've got time. Hold on. I want to come back with some thoughts about this HPY.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. Dow's down 61, S&P's up 3. Now, let me just go through this. We've got Mike in Pennington, New Jersey online. He spoke about CMG. I said there's no trade there. Let it just play out. But HPY is what he brought up, and I think this is a very good-looking Heartland Payment Systems, Inc. Now, what I like about it is that the monthly chart so far, leg D up, shows no signs, a little bit overbought, but no signs yet of any signals to say it's going to reverse. That'll have to come from the shorter term. Well, the weekly is in a cup and ladle breakout pattern, and I've got F/B. I have to do that because if I called it F, that would be a very negative implication, and I don't have yet any signs of a negative implication. And the B says that peak D that was made in the weekly back in the week of the 3rd of May at 34.26, round number 31 low, but then it came down a little bit lower to 30.50. That could have started a brand new A, and this could be B. So that's the best, or it could be even a brand new A. So I don't want to even mess with that. The weekly chart is the pattern that I'm looking at, not for the price, but for the pattern. And this particular pattern says that it could go a little bit higher, maybe a point, maybe a point and a half. It could even go higher than that, but I'm saying around about a point and a half. The 40 is at 41.94. The 43.25 to maybe 44.20 area. I don't know if it's going to get there right now in this move, but that's where I would expect it to reverse. And then it says the pattern should come back and it should retest between 40 and 38.70. That's the area that, for me, would be the biggest clue. If it does what I'm talking about, and it comes back and tests successfully without breaking into the 37s, but over the next 3 weeks, it has an extra move up, and then it pulls back, that's where I want to look at it, because that's where it either breaks down because it's completed the pattern as an F, or it just holds very nicely, takes a little time, and then starts another move, which would be leg C. The daily is the one that still is very successfully at 90.52 says this is a great move up and it should go higher. So my suggestion is, as it moves a little bit higher, you don't have to do it because you've done so well so far. My thinking is to take a little bit off, and that's the money that you would dedicate to possibly putting back if it pulled back towards that 39.5, 39.25 to 30, I'm thinking the 38.50, somewhere around there. So that's my thinking. So I have to congratulate you. It's fabulous. I'm not calling it a trade. It's a position play. The trade would only be with the one part, a little bit that you take off as a reward, but also money management, and that you might want to put back on a pullback. So I hope that helps you.
Thank you. The earnings are next week, so I was, concerned a little bit about the earnings. You never know what could happen there, but.
Oh, if the earnings are by Wednesday, I wouldn't be surprised if by Monday or Tuesday it just makes a leg D and then it just holds steady, and that's where you're going to make some decisions. Hey, you can call me again next week. Let's look at it. Thank you very much, Mike. Now, I had a couple of questions in the debt. I'm going to just do this right now. Or USD. This is the euro dollar. That spike up from the falling axe pattern, I spoke about this yesterday. I said if it's going to do anything, it cannot break underneath the candle, the low of the candle that was at 1.3472. If it took out the low that I was talking about yesterday intraday, I said the next level of key support would be the 1.346. That was the low of the 25th of July. But if there was a spike to the upside, in this particular pattern that I call the falling axe in my CD introduced in the Chapman Wave methodology, I want to talk a moment about the floating ladder, but that's, let me see, that's slide 91. Let me just go to this declining cone formation, chapter 24, I believe. Let me just see. Yep, chapter 24. This is the pattern that I showed yesterday. That's the pattern. So here we are. We're broken out in the euro, just exactly the way you would expect, right through the previous left side highs, right through the 1.3645 high of October the 3rd. And this is leg, I'm calling it leg F for now. Here again, I might have to go all the way back because it's made a higher, this is a little difficult to use, maybe Technical Friday I'll get into this, but just let me say that there could be an alternate count that says this is F/C. F/C. And why do I say that? Because it's recycled. You remember what I said in the weekly chart? If at any point in this particular phase it takes out the high of 2 weeks ago, the high of 1.3645, I have to rename this. It's very unusual to get this as a G. So I'm putting a C/G, and that's very positive for the euro, even though it hasn't taken out the old high, because it says it's trying to challenge the down channel, that inside track resistance area, and that's what I'm looking at. Now, this is the daily count of the euro itself. ECZ, I don't know if I've updated it. Whoops, wrong place. ECZ, got a lot to do here because I got a whole bunch of requests. ECZ, I wanted to also show some stocks that have been pummeled. Whoa, look at that. ECZ, this is the Euro FX December. This is leg A, this is B, C, D. Now, is this, so this is gray A, this is E/B, yeah, and this is F/C. I think it's C. I'm going to call it C/F in the weekly chart. That's very positive for the euro. Wow. Yeah, that's my count. That was the question. What's the count? Oh, that's the daily. And on the weekly, I didn't do that. So the weekly is the low bar cannot be the high bar, so this is A. And that's a very positive, that is a really positive candidate. Remember, who was I speaking with last week? Oh, we had a whole conversation about it. Got it written down. we had a whole conversation about, I had an email about it. Can the low bar be the high bar when you're at a major low rather than the instant restart? I spent a lot of time saying no, it cannot be, but it's extremely powerful, and it says that there should be a full count of at least D, and here we are in leg E, and you're about to retest the left side high in the euro. This is the December contract. But now let's look at the dollar. Why? Because the dollar, I told you, the dollar's making this pattern that I keep talking about. The H that goes to an M pattern, and it keeps doing that. There's it again. And look at the weekly chart. It's taken out the left side low of 79.63. This is 79.61. So this is leg E to the downside. The monthly chart, I'm really worried about that. And now let's go to gold, GCZ13. And we'll look at this. Here's that pattern that I'm talking about. The H goes to an M. I think we're getting yet another rally mode in gold, and it's a trade. It is not, I don't think it is the turn, the major turn. I have to preface it by saying, normally in the H pattern for the M to really continue, I would expect a lower trough. If this low of this week in gold, instead of stopping at 1251.00 round number, went into the candle of the week of the 12th of July, towards the 1218, somewhere in the 1220 area, then I would say, wow, that's going to be an H&M. This can turn out to be a stronger one going to the 1460 level if certain things happen. Let's go one step at a time. Just a positive turnaround. The very short term says the level to take out in the December gold is 1353.80, the high of the week of the 4th of October. Keep it as simple as that. If there's a failure, that failure says within 2 days, the 1297 9-period exponential moving average should be tested. Just keep it that simple. Same as we're trying to keep the VIX symbol, the VIX levels, buying and selling pressure numbers, as simple as possible. Now let's go to I had a question of the Dan because I couldn't remember. I'll go to IBM. I wanted to get some of the most recent smackdowns, the stocks that had just got pummeled on earnings reports. Look, IBM, my target has been 174 for I don't know how long in the 200-period exponential moving average weekly. And that to me says if it gets there, it's how it acts to the magnet of this line that's going to be really important. The reason is that there's a Chapman wave methodology that I call the flat-based restart. Now, the flat-based restart you won't find in my CD introducing Chapman wave methodology. It's something I developed later on. I was doing it at the same time, but I like to test these things out for a long time before I call them an official technique. So the flat-based restart, and I spoke about for a very long time. I even drew it in here with the left side, right side price time match. It's taken it out. It's 1 month late. So all the way back from October of 2011, we missed by 1 month for the arch formation to take out the left side low that I was targeting, which was the low between 177.35 and 177.06. Let's call it 177s. The low today is 172.57. And I put that in, flat-based restart. This is going to be for my next Master Trader Series, the second level of Master Trader Series. This is going to be a fantastic study piece. And why? Because IBM has been one of the weaker Dow stocks, and the MACD and stochastic were failing in all time frames. So this is not a surprise that it broke down. It's not getting to an area where I'm sure some people are going to say, oh, you know, man, this is a period where maybe we want to start nibbling, etc. I'm not sure. Let's see how, in the next 3 weeks, how the 174 level acts as either a propellant, a repellent, or a magnet. I think it's a magnet line. We're going to trade up and down, up and below it for a little while to come. So now let's look at another one. What was yesterday? What was today? I said Goldman Sachs. Look at this. Goldman Sachs made a peak D in the monthly chart. Nothing negative yet. The MACD is still good. The stochastic is holding at 83%, but it is all this work to get from 84.47 to 169, a double, took so long, and it couldn't break the quick move from 47 to 193 that came from 2008 to the 2009 October high. That says to me Goldman Sachs is working very hard, but it hasn't yet become the master of the markets as it once was. But here we are in the weekly chart, and you'll see that it made a peak D, pull back, a peak E just a little bit higher, pull back, a higher high, then a slightly higher low, then a slightly higher high at F at 170. Oh, I forgot. I wrote that in, and then I forgot all about it. 170, round number high. Remember how I love round numbers. And what does it do? Bad earnings. But last week it takes out the support level of the 9-period moving average, goes to 152.83. So far this week, not bad action considering, but look what happened. The daily chart made a peak D at the 170 round number high, right there. Oh, I forgot to treat this as a trade. That was dumb. Anyway, that happens. There's just so many things to look at. And now look what's happening. I think that Goldman Sachs it's not the end of the world at all. I think it is forming a pattern that says, I'm just going to go into a trading range for a little while. I'm still trying to get my act together, but I'm not yet succeeding, but I'm also not failing. I'm just kind of be trading in this range. Call me range bound. And then there was another one, eBay, I think it was. Note in the den, one of our denners who I used to always call in. We called him Boston. Just lost his father, and white light to Boston. Lives in Brookline. Our best wishes to you, Boston. Haven't heard from you for a long time, and our deepest and sincerest regrets, and what can we say? Our wishes are with you. So let me go this. eBay had the same thing. Bad earnings, disappointing, let's call it, but it made a peak D in the daily, right there, high of 56.90 on the 26th of September, pulls back sharply. Where this is going to retest that low of 49.62 back on the 30th of August. But wait a minute. It's the weekly that was always impressing me as being so resistant. Now look at this channel line. Look at this inside track methodology that I use. You see that line that I drew there? Peak. That's a peak F. And then it pulls back, goes to an A minus, fails, another A, which is an A minus. Now, in my work, in my introducing the Chapman Wave methodology, way back in the very beginning, I talk about channel lines and something that I call the inside track. And that inside track, it's fascinating how it works. I discovered this years ago. And what it does, sorry, I hope you don't get giddy from this. I just want to show this right there. This is something that I developed a long time ago. I noticed that within highs and lows, it could be in a sideways channel. It could be in a down channel. Oh, Boston Mark. Boston Mark. Oh, I'm sorry. Jack Toole, he said Boston. That was Boston used to call about gold. This is Boston Mark. Also one of our wonderful dinners in the Boston area. So sorry, Mark, to hear that. Yep. Thank you for correcting me. It's Mark's father, and our thoughts are with you. White lightning to you. So here's the repeated carry.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated created and explained daily to educate investors. To get your 2-week free trial, do the opening call. Just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, so eBay, just real quick, I had a question at the end. I don't want to run out of time. These are very important things. Question at the end about the count and the Qs. The QQQ series is in leg E to the upside in the 120-minute chart. The MACD is very strong, stochastic 96%. The weekly is going right into that tough resistance area. And the daily I still have is F/A. Stochastic is at 92%. The MACD is just crossing positive. I have to treat this as if there's a chance that we could keep going. If it's A, we have to still go to B, C, D. If it's going to reverse, today would have been perfect. I mean, in the old days, if IBM was down like this, you would have seen the market, and there's no way the market would have been down less than 135 more at this particular point. IBM is not as relevant. You've just got too many others that are doing very well. So let me just go back now to the eBay and show you the chart. And it's just amazing how many of these gave warnings. That's the reason why I don't want to mess with CMG, because I don't really have the warning. It'll be a bit of a surprise if there is a very negative sign. So look, T with a high-level consolidation in eBay. Technicals are failing in the monthly. A month isn't finished. But if eBay closes under this whole congestion area on a monthly basis for the very first time since back in December 2012, underneath 49.20, and it's at 51.41, 51.54. That's going to be a big negative. So I'm watching this closely. There are some stocks that are just having a tough time in this environment. So let's just do this because we're going to run out of time in a few minutes. And I have to leave, so I'm going to do this right here. Here we go. Volatility index. And this, folks, let me just add, in my opening call, one of the reasons why I chose very specifically areas that have been the weakest that I thought were acting very, very well is because in this environment, when the market comes back again, I want to see those particular stocks go even higher. It's no use picking stocks that are laggards, but when the market comes back, they're still laggards. They must participate. Thank goodness they are. One in particular is up almost 3% so far today. It's just been doing fabulously. Another one is doing very nicely. Not great, but nicely. Nicely is good in this environment. And I think it's very important that you be very stock specific in this particular instance here. So let me just do this one little thing. Oh, what a busy time going on here. The VIX. I'll talk about the VIX to say that if the VIX, is that a call that I mistake? Let me just write this down. 6, 4, 3, 2. Okay. In this particular instance, the VIX is just plunging. The weekly chart, look at that. I mean, that is devastating to the volatility index. And in the monthly chart, hit the 200-period moving average and then got repelled. So how this week closes, how this month closes is going to be very important, because if you continue to get this buying pressure, the buying pressure is going to say, watch out. Because look at the inversion of this whole thing. Let me just put the Dow, let me put the S&P up here. The SPX. Look how the S&P is trying to challenge the resistance lines. It's walking the 9-period moving average. If the S&P goes above 1729.86, and today, this week's high is 1726.82, it's just 3 points higher. That's going to be, I don't know, boy, this is tough when you get these counts. I'm going to call it a D/C. I have no reason to fuss as to what I'm calling it, because if it makes a new recovery high, that's just great. I have time to think about how the daily is working. But all I can say, if it makes a new recovery high, and this is just still single leg A up in the daily, I have to say, this is really impressive action. Very impressive action. So looking to the downside, the Dow breaks 15,200 decisively. That'll be a big negative and drag the market down. At this particular point, everything's pointing very nicely upward. I'll be back tomorrow. Thanks for being here. Stay tuned. Larry Pesavento, and I'll be...
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.